All right. All right, guys. What is up? What's going on? What's Gucci? How are you? How was your day? How is your Tuesday? Hopefully it's going well. Hopefully it is going well. I was watching silver today. I should have traded it. I didn't. And it got me thinking. As did last night. Willow is with the shits and wants to smoke. I'm not sure where that's coming from, brother, but we can talk about it. We can talk about it. What's good? Iberneth, Naruto, Willow, Sean, Leon, Edgar, Nikki, Trillionaire, Andreas, 2020, Martin, Sloppy Tuesday. Well, the indices just weren't as clean as yesterday. I mean, they are clean, just not what I really wanted today. So, what we get this afternoon? Honestly, I don't know. But they don't look like they're ready to go long yet. They don't look ready to long yet. So we'll see. We'll talk about it. I do want to have a quick discussion with you today. I understand, Willow. I totally understand. I get it. I get it. I get it. I'm wondering if this was a buy here, to be fair. And the only reason I say that is we're below an old low. So I'd rather not short. We had some lows here, ran. We traded above it. We traded above this high here. And then, so we're kind of, I mean, I'm looking at this as if it's a mitigation, even though I think it doesn't look the greatest. And if you extend this gap I have here, that is within that. So I mean, it looks okay, but I don't know. I don't know. We'll watch it, but we'll give it a few. We will give it a few. But anyway, so I was listening to a podcast last night. Forgot what it's called, like Two Bears, One something. I keep forgetting the name. It's those two comedians. Do you guys know what I'm talking about? Caught a good move on Dow. That's good, Trillionaire. That is good. Oh, Two Bears, One Cave, or something to that effect. But anyway, I only watched it because Ryan Holiday was the guest. And I remember, this is why I got this book. And it was a long time ago, maybe like a year and some change. I watched a Joe Rogan podcast with Ryan Holiday. That's the only reason I watched it. And at the end, I guess every podcast that Ryan Holiday goes on, he brings books and he gives people books. That's why I started doing that too. I'm like, okay, well, I'm going to go meet this person. I'm going to bring him some books. I'm going to go meet this person. All right, I'm going to bring him some books. It's a very good business strategy as well. Not that we're here to talk about business strategy today, but if you're taking notes on business, there's a little gem for you, okay? But anyway, so he, at the end of the podcast on Joe Rogan, he's giving them all these books, like stuff about Texas, whatever, self-help, personal development, all this. And then he hands them this book, The Tiger. Let me see. I want to cover it. By John Valent. Okay. I made a reel about this a long time ago. Well, meaning like months and months ago. It's called The Tiger by John Valent. I was actually really excited about getting this book. I purchased this one from the Painted Porch bookshop in Bastrop, Texas. That's Ryan Holiday's bookshop. And yeah, I made a reel about it and everything. The problem is I didn't fucking read it. Okay, I didn't read it. So I read like the first, whatever's before chapter 1. It's like the epilogue or whatever. And then I think I read the first chapter, but I decided to reread it last night. So there is a really good point that the author makes about what the title of the stream is today, Crows Who Stalk the Tiger. So what do you think that means? What do you think that implies? Right above break even, I'll take it. Hey, reducing risk is a wonderful thing. Don't let anybody tell you otherwise. Excuse me. I just had a really good bagel too. That was my breakfast and lunch today. Was a bagel. I've been doing that a lot lately, dude. I've been doing so much on a computer and even like outside. I got rained on last night on the way back from my walk, and sometimes I just do so much I just forget to eat, man. Sometimes I read so much or write so much I just forget to eat. Until my stomach starts like screaming, high-fiving my backbone and screaming, you know? But what do y'all think that means? S&P stronger for right now? Man, I don't know. It traded below this low and then sat there for a while. A little rally during lunch, and here in the afternoon session, we definitely wicked lower. Which I think we could see higher pricing. Dow, same thing. It was ass, wicked lower, probably took some short-term lows, and I'm watching the Nasdaq because I feel like the Nasdaq is the numbers aren't showing it, but I just felt like the Nasdaq was stronger. So we'll see. Just like we always talk about trailing stops and shit like that. Well, we're at the lower end of today's range, so we are in I would say discount pricing. We're below an old low as well. There's probably trailing stops here at 1406, or excuse me, 14806. Many digits. So many digits. Is that like keeping tabs on your potential predators to not get caught? Don't ask me why or how, Willow. Tigers have an interesting life to watch, I guess. Okay. So, this book, just so you know, The Tiger by John Valent, is based on a true story. It's this man-eating tiger. I think it's over in Russia, if I'm not mistaken. I think most of the characters are Russian. Anyway, it's about a group of people. There's one specific job that they are to investigate incidences involving tigers and human beings. So I might get this wrong, but there's this sort of black market when it comes to animals, like animal parts. You know, like say rhinos and their I don't know what you call them, or maybe elephant tusks, or stuff like that, right? Poachers who hunt game illegally, right? Well, it's the same thing with tigers as well. There's all these laws in place that prevent hunters from hunting certain animals, and the tiger's one of them. That you can't kill a tiger unless you get permission from Moscow and whatever. But anyway, it's kind of like a game warden almost, but the Russian version. So anyway, they get this call. They're notified that there's a man-eating tiger, that's out there. So they go investigate. They get a team, they get some guns, they get their shit together, and they go out, and then they find this scene where it's this fucking book, dude. It doesn't show graphics like this, but it does describe how when they pulled up to this scene that they found a hand without an arm and a head without a face. And I went, oh my God. Right? It's crazy shit. The snow is like pink because of all, I guess, the blood and stuff. It's interesting. And this is all in chapter 1. So the author is, giving some background information, right? Stuff about tigers, the country, blah, blah, blah. So when they pulled up near the spot, they, on page 13, he says, the first sign of trouble was the crows. Carrion crows will follow a tiger the same way seagulls follow a fishing boat. By sticking with a proven winner, they conserve energy and shift the odds of getting fed from if to when. And he goes on a little bit more, but that little segment right there, how crows follow a tiger the same way that seagulls follow a fishing boat. I got to think that was very interesting to me. I mean, that's not brand new. When you see a boat, there's usually birds around like seagulls and shit like that. Why do seagulls hang around the beach? Because beachgoers bring food, seagulls get fed. That's how it is, right? So I thought that was very interesting. And in trading, it's the same thing, right? We are not the tiger, unfortunately. We are not. Okay. I'm just watching this. I'm not saying to trade this right now. I'm just watching to see what we do. If we've shifted in delivery, then this should send price higher, is what I'm assuming. Okay. So the central banks are essentially the tiger, and we as crows, we're investigating price. We're following along price to go, okay, what is it going to do? And so I'm assuming when a tiger, catches its prey, does its thing, and there's obviously going to be some sort of, leftovers, and that's where the crows come in, and they're blessed, right? So I'm telling you this because this is essentially how we trade. This is how we look to trade financial markets, right? We aren't the tiger, but we want to follow the tiger and then go, okay, how can we capitalize? If stops get ran, market shifts from bearish to bullish, then that next retracement, right? That could be our go-to. That could be our opportunity to potentially catch a reversal. So it's not a intricate or complex concept. It's just you have to know where you stand on the food chain, my friend. That's the thing. You got to know where you stand on the food chain. A little bit, Naruto. I mean, they were in a forest, but this is Russia and this is wintertime. So it's like snowed out. There's paw prints in the snow from the tiger and other animals and whatnot. So their forest is not the same as like a jungle where it's green and there's a lot of trees and shit. This forest, according to the book, is not how you would think. And when I first told you guys about this book, I did end up showing you pictures, right? I don't know. It might be hard to see. The camera's not going to focus because it's too close, but it's not a traditional like green forest, right? Even the tiger itself, you can see the background of the forest. I mean, it's snowing and there's literally no, what do you call them, leaves and shit. So but yeah, it's pretty cool. So not just the fact that there's this apex predator, and it goes with the concept that we use for trading, but like this was a real story. This was in the 90s. I was like 4 maybe 5 years old when this actually took place in real life. So it ain't the greatest book in the world. I mean, it's not the most, I'm not screaming at you to go run and buy it, but it's intriguing. And the fact that this guy quite literally got his face ripped off just adds more to what we go over here, right? I tell you guys not to get your face ripped off. This guy actually got his shit ripped off. Fuck, I can only imagine that. Getting eaten by a big ass cat. Yikes. Trader missed the first 15 minutes. I mean, you haven't really missed anything. We talked about how this might be a long here, but I don't know. Something is off about the idea of taking a long here. Something's just off. I mean, the 15-minute looks okay, but look how discounted we are right now. This was yesterday's low. So we're below Monday's low. We ran some morning lows like right at the beginning of lunch in the AM session. So look at the current range, right? So we're obviously near the lower end of the range. So we're in a extreme discount, but that doesn't always mean to look for buys here. You see what I'm saying? Because we can still make lower lows today. And then your discount level ends up being not what you think it is, and then you take a loss. So if this run here was a little bit more amplified, I guess I'd probably feel better about it, but I'm not getting jiggy with it just yet. You know what I mean? Kobe with the upgraded tier 3. Very nice, very nice. Very good, very good. Which reminds me, not that I was going to get into it just yet, but that reminds me. Anyone who is a tier 1 or tier 2 member, I highly suggest you get to tier 3. Tomorrow, I will give you details as to why. I'll give you more details as to why. I mean, obviously, upgrading from 1 or 2 to 3 gets you the Discord. And all of the member-only videos. Because some videos are 1 and up, some are 2 and up, some are 3 and up. So when you get 3, you get access to everything. Okay? So, there's that. I'm trying to see, you know what? It looks like we just made some equal highs on really small time frame here for the S&P. 43.35 and a half. That might be important for later on. Campfire story. Oh yeah, that'd be cool. We'd just be sitting around a campfire. I'd be like, tigers just eat people. It's been done. I have the proof. Shit. I don't know if I'd be more terrified of a tiger or a bear. What's more terrifying to you? Let me ask you that. Let's start a poll real quick. What's more terrifying? A bear or a tiger? Or you pull up and it's a bear fighting a tiger. Imagine just walking through the forest and then you hear some leaves rustling in the background and you go, what the fuck? And all of a sudden you see a bear and a tiger just going at it. And they're making their way towards you. Oh my God. I don't know what I do. Well, either way, I'd probably have to change my draws after whatever happens. I'll tell you that. For real. For real. I mean, it doesn't matter how stoic you are. A bear with cubs. Yeah. I've seen videos of bears running and they can run very fast. Like, it's disgusting how fast they can run. Well, Naruto, you know, I don't know if tigers are faster than bears, but I do know one thing. Either both tigers and bears are equally faster than humans, and that's all that matters. You're done. You're done either way. So would it really matter? See, we're back in here and I wouldn't want that. So we might have extended our bearishness. I'm gonna take that off, but I will keep this gap here just to see. I don't know, but we'll see. Okay. Want to see Cocaine Bear? You know what's funny is Cocaine Bear. I haven't seen it. That did come up on my Amazon the other day. I'm like, I'm not watching that bullshit. But I think it's based off a true story. I'm pretty sure I'd put money on it that Cocaine Bear is based off a true story. Mounds, bears cruise through the yard literally every day. The bears are more scared of y'all. Yeah, 2020, I agree. Bro, there's no way. There's no way I could live out there, dude. I mean, I'd have to have like rifles, fully automatic, and then probably like some grenades too, bro. Because there's just no way. There's just no way. I'm not doing it. Wake up in the middle of the night, walk into the kitchen and see a bear. Come on, man. Hell no, bro. No, 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 no. No, no. Nope. It ain't happening. I see Luca upgraded to tier 3 as well. Very nice. Yeah, Edgar. I haven't seen that movie all the way through, but I have seen that scene where he wrestles with a bear. That's, to be honest, that's a really, really good scene. I mean, they did a good job with that. They did a really good job with that. I mean, I've actually been pretty impressed the last, I don't know, few years of how far these producers go to make a scene as realistic as possible. And that one was pretty spot on. Gonna sell on Dow, 1 minute imbalance, 1208 candle took me out. BE. Break even's better than a loss, man. Break even's better than a loss. But journal it, log it, and learn from it. They just want the trash. Kind of like raccoons. They're just looking for trash. Narzo said, I was doing Colorado activities in Colorado. Okay. Bear was just rustling through their dumpsters like a raccoon. Oh, that's funny. I literally just said that. What's the name to the Discord? Kobe, when you connect, you go into Discord, okay? You go to the Discord user settings and you go to connections. Once you get to connections, you sign into your YouTube. Okay? And I'll pin Willow's message so you guys can see that. Was good, Alex? But the thing is, bro, here's the thing. It's funny when someone says shark infested waters. It's like, dude, that's their fucking home. What are you talking about? It's the ocean. What do you mean? So it's almost the same thing when it comes to like bears. You can't be upset that there's bears when you live in the forest, bro. You live where the bears live. You know, that's just not very smart. That's just not very cash money of you to do that. Live in the forest and then not expect bears. That's crazy. It's interesting how we left this here. Now, let me tell you something, and let me go over yesterday's price action as well. If you want to trade like really small time frame, like 1 minute, I'm not against that. I like 1 minute time frames, but I will tell you this: if I had only the 1 minute and I couldn't look at anything else, I would look at stuff like this, where you have possible liquidity here. It's a down day. Everyone's trying to catch the bottom, right? So anyone who went long, they might have stops here. And we left the highs like this. We have a higher high. But on ES, we have equal highs. So to me, like when you see that, that signifies distribution. And then I would start looking for shorts. But the only issue with that here is we didn't really get a retracement that I would utilize per se. So what you should do is really investigate yesterday's price action and what we discussed. Yesterday was cool, but it did things opposite of how I told you I wanted them. Right? And obviously I'm going to go and do a lot more in the market review, but you remember yesterday we outlined some levels, right? What were those levels? London's high, these two highs here, and then these lows, right? So I said, all right, well, I want us to come up to the highs and then smash the lows. And then what we do? The market said, all right, John, well, screw you, runs the lows and then goes to the highs. So it literally did opposite of what I wanted, right? And that's why I threw that in there yesterday and said, I'm not trying to predict 3, 4, 5 moves in advance. I'm not trying to do that. And now you see why. So I walked away at the wrong time yesterday. I will tell you that. That was my fault for not having lunch. But those levels up here are not irrelevant when price sinks below the lows, especially in that final hour. Price then rallies higher, but look at the significance here at that 215 candle. Okay, look at this. Look how explosive that is. What the fuck? Are you guys still here? Can we do a sound check? Drop a 1 if you can still hear me. All right, thank you guys. Drop a like on the stream too, if you could. We're a little low. We're a little low. We got to pump those numbers up. Anyway, what I was trying to say, this right here, okay? You see how explosive that is? So what I was, and I pointed this out yesterday too on the someone had posted in the Discord, and I was saying, look at the reaction here. Okay, so this high at 201 was traded through. Okay, so now I'm going to say this one time. All right, I'm going to say this one time. When we talked about yesterday, I told you if we go up for the highs and then drop down, we need an imbalance that is on the way to liquidity, right? I said it's got to form an imbalance on the way there. Okay? Now, obviously, it didn't form an imbalance lower after taking the upside because it didn't fucking take the upside. But what it did do was take downside. So you go, okay, you can either buy under the lows, which again, I didn't do, but that is the Weissline model, buying below old lows. All right. This is for your notes, and I'm putting all this out here for free just for y'all. This created an imbalance on the way to the highs. Damn, it got rid of my mouse highlight. What the fuck? There we go. It creates an imbalance on the way to the highs. So that next retracement, that's it. That's it right there, right? Crows following the tiger or stalking the tiger. That's it. Okay. Downside. Stops have been devoured. Why would that be the case? Honestly, if you really want to take your trading seriously, I would just go rewatch yesterday's stream. Okay. I can always tell you like follow-ups and shit, but I specifically remember saying, what was the focus? The focus was we've been bullish all morning and even part of the afternoon. So I said, where are the stops at? Down here, where are they going to drag them up to? When the market starts to trade higher, they're going to take them where? Drag them right fucking there. Right there. Right there. Where does the market come down to? Bam. Knocks them out. They get knocked out. Then the market shifts. That's your retracement before the big move. It's simple. What was it we said last week a couple times too? If the markets go higher, they're going to go lower first. Okay, we'll study that too. The market did go higher, right? But it went lower first. Are you starting to see how all of this is interconnected? The logic, the stops, who's in open profit, who's not, who's offside, how to get onside, how to get in before the big move, where's the market going, when's it going to get there, how to enter, where are the stops at. It sounds like a lot, but it's really not. It can be simplified. And there is face ripping. There's your Nasdaq face ripping. It said it went right through that gap. Retracement, bam, ran for this low. Okay. So that's not bad. Good thing we didn't fucking long that. And now they're all probably lower. Yep. Look at that candle. That is not a very bullish candle. So However you look at it, man, lions and gazelles, crows and tigers, um, fish and sharks, whatever, man. It's all the same. It's all the same. Anyway, that's the point. Okay? That's the point. Every day, I come on here. Well, every stream rather, but every day when I'm on the charts, there's just a few simple questions. Where's the market going? How's it going to get there? Where are the stops? Who's an open profit? Or loss, you could say too. And there's all these little minor sayings, right? There's no free lunch on Wall Street. And all these, little things that we say. The market, bears or bulls take the stairs, bears jump out the window, right? Just these little things like that. But they all basically lead back to the same thing. Fish and chips, Dennis. Thank you. On the daily? Well, yeah. No, that's what that markup was before I deleted it. I started to draw a bunch of shit on here and I just wanted to delete everything. But you're right. It's right here. Right there. Okay. Now the market looks like this because the volume is very low. This is May. Okay. This is the December contract. But this was back in May. So the volume wasn't there until recently. Okay. So that's why, like, that is a gap that I would aim for downside. Sure. I don't think I did this week. I don't think I said I would aim for that, but that is important for today, right? Because what I'm saying is you've got two price levels, 43.14 and 43.18. Now the market does not have to respond right here. It doesn't have to do that. We can trade through it to a degree, right? But then if we get a shift higher, if we get an imbalance higher on the way to 43.35 and a half, that next retracement is going to be, something that I'm looking for to long. If the low has been set, I need it to be, something that there's got to be some sort of higher time frame levels at play here. So think about it. Obviously, the money today to be made has been downside, right? We were pretty much like London and pre-market, we were at the 43.60s. Right now, we're at 43.16. So the market is heavily traded lower. So just do the inverse of what we did yesterday. Yesterday was bullish, right? Yesterday was bullish. It didn't rally like 50 points, but that's okay. It rallied. Where were the stops? At the lows, right? So the market attacked that. Okay. Well, what's the inverse? The markets have been bearish today. So where are the buy stops now? They're going to be, well, they're probably going to be there if they're like really loose as far as like really away from the market, like maybe a 1 hour time frame or something higher, then they might be there. Okay. Like I mentioned earlier, I think, but on the Nasdaq, that 945 high, there could be stops there. But what's the most immediate? The most immediate is 43.35. And them being equal just to me is even better. Because everyone's looking at that like, oh, this is bearish. So if it comes back up here, we'll short it with stops here, and they're gonna get fucked up. And like that's the context, right? Today has been a bloodbath from 43.60 something, 67 almost, right? So anyone who has been short, they're euphoric right now. right? They're absolutely euphoric. Counts doing backflips, loading up that Amazon cart. I understand. So where are the stops? Anyone who has been trailing their stop, again, here, here, and especially here. Okay? So this to me would be the easiest objective to get to if we do have a reversal today. Are we going to get that? I don't know. We don't have to. The markets can just keep dumping all the way until the close. There have been days like that before as well. And okay, if that happens, great. Then I probably won't take anything today. But again, I'm trying to portray to you the logic, behind price movement. We're at a daily gap. What do we do here? Do we trade through it? Do we consolidate here? Or do we end up maybe getting some divergence here that sends us higher? And on the way there, we could probably play a short-term reversal. And that to me is enough for a trade idea. Okay? Took a long on Nasdaq, but still have to understand how to risk on futures. I did not. That's okay. No, that's good, Lee Bright. That's good that you're on demo, because then you can see the numbers. I mean, one contract and it goes against you for like 30 minutes and you're fucked. Yeah, excuse my French, but I'm just saying, like, futures will literally rip your face off. Log on the first reaction, the 50% of weekly gap. Oh, okay. Makes sense. It would be euphoric if price had not come back up. Pure manipulation. Yeah. It's all, I don't want to say it's all manipulation, but there are certain elements in price action that you can see clearly that, oh, okay, this is just to run stops, to run liquidity, whatever. Big money getting in and out of the market, algorithms taking price and moving that bitch. That's also in the complete trader, which I don't know what I did. My iPad is somewhere. Anyway, I'll find it for you tomorrow. I'll show it to you. But Mark Douglas and Paula Webb had talked about that. They said, when there's not the quotes, there's like multiple quotes and it's long, but basically they're saying, look, electronically, the market will reprice to where buyers and sellers are at. Now, I believe there are buyers and sellers at every price level, right? But it's just price levels that are, I guess, leading up to areas of liquidity. They're just going to get ran through. Like, they're going to get absolutely obliterated. Like, if you were looking, say, at this imbalance and you're going, yeah, I'm going to short that. Okay, well, if you short just above equal high or just below equal highs, it doesn't matter to me how much buying and selling is in there, because the algorithm or whatever, Mr. Smith, is going to take that bitch and jam it up above these highs, because there's going to be way more liquidity there than simply here. So they're going to look to railroad anyone who's been short. Okay? Like, this to me would be a good area to get out of shorts. Like, getting out on the way down. That to me is logical. Even if it continues going lower. Okay, cool. But, the whole point is to buy low and sell high, right? So if you've sold high, well, it's probably time to buy low at some point. I mean, not financial advice, but, just saying. They're coming from Mr. Anderson. Yeah. Yeah, they are. All right. Welcome back to indices in a minute. The only thing I saw on silver today is I was going to long, And I put up a risk reward tool, but I couldn't really frame a 1 to 3 here. But when price was at 840, when it traded above these two down candles, when it traded above that, this next candle here, I said, okay, well, right there, I would long 22.95 with a stop down here and a TP here. Okay. The only issue with that, it's not a 1 to 3 because the stop is too wide, right? Like from here and then here. I mean, that's barely a 1 to 1. So I'm like, fuck, I'm not going to take that. And then it immediately goes lower. And I'm like, oh shit, I'm glad I didn't trade that. And then I just walked away. And then I come back later and it goes right here and then turns. And I go, wow, I mean, that would have been an okay trade. But again, 1 to 1.2, that's not mathematically advantageous in the long run. 1-to-1s, like that's just not. You got to be really, really accurate if you're going to take 1-to-1s. And I just, if I can't frame, I would say my bare minimum has got to be 1 to 2. That's like bare minimum. I mean, I almost never take 1 to 2s. I have in the past done it. But 1 to 3, I'm way more comfortable pulling the trigger. Because it's worth it mathematically. Okay. But anyway, the only reason for that, and it's funny, it came right back down. But the only reason is because we just had a small divergence here. Gold was lower. So silver was higher, but I had to wait until it traded above these two down candles here. So once it did that, it's like, okay, we have traded through this, and then now we can look for longs. And then it just whoop right up to this high. Well, why do you think that happens? I mean, think about that. If you're not familiar with like price manipulation and all that, I mean, because I've been teaching this shit, guys, for so long. I mean, I've been teaching for like 5-6 years by now. And one thing that, you know, I guess would really elevate your understanding is when you study price, study why the high or low was set at certain places. Why does it just so happen to do that? Why does the market just so happen to trade just above a previous high and then absolutely dump lower? Why do you think that happens? Or why do you think I come on here and, you know, tweet shit like this, which in hindsight looks pretty nasty if you think about it, right? That's way up here, right? And we're going to keep that on here because that looks pretty good. I mean, look at that shit. That looks pretty fucking good, doesn't it? It's not about that, but I'm just saying, you know, why do you think that happens? Because you have lows here. Anyone who's been long, they're going to have stops here. And the market absolutely obliterates that. It didn't reverse. Not every equal lows is going to, or low resistance lows is going to be a reversal, but I'm just saying, think about it. Look at today's price action. Okay. This kind of looks like shit to me. I'm not gonna lie to you. It kind of looks like shit, but look at the high of today during London. The high happens to be what? Just slightly above a previous high in a bearish market. Why do you think that is? At the end of the day, it's all manipulation here. And this is why I look for relative strength. I'm looking to see, like, let's come back here. Look at silver, okay? A low at 205 and a low at 835. Okay? Look at gold. 2 o'clock was here. What do we say? 835 is way down here. That's dog shit. Gold is horrendous here. Horrendous. But silver is like, you know what? I'm not trading lower. I'm not trading lower. So obviously the metals were lower today, but if there's any, I guess if there's any signal that there's bullishness, even if it's short-lived, it's here because it's not going lower. So once it trades above these two down candles right there, okay, once it does that, it's like, okay, we can long the next down candle or even like a smaller time frame imbalance if you were looking for it, right? Let me give you a secret too. Well, not really a secret, but you could have even misinterpreted this as a mitigation. You could have, because it trades above it, right? And you could have longed as soon as this down candle formed. Like as soon as it starts to form, you could have said, oh shit, I'm gonna long that, right? And let me ask you this. When you went through the video of the mitigation model and we talk about stops, right? Where's the stop supposed to be? Well, either at the low end of a down candle or an imbalance or whatever, but you don't really have that anywhere in here on a 2-minute time frame. I don't think you have that on a 1 minute either. Or maybe like a small imbalance here. You could have long that. And where's the stop supposed to go? At the low. So your entry could have had instant drawdown. Instantaneous, just like you saw yesterday on gold, that recording. Hopefully you watched it, right? Instant drawdown, doesn't get to the stop, trades higher, back into it. Like at that point, I wouldn't really consider that anymore, but it is back into it. And then it launches right for this high. So what you have to expect, what I'm trying to portray to you is this. You could have longed dog shit entry, but if the stop was, far enough away, if it's not too close to the market, it still gets to your TP. There was still some sort of opportunity to long silver based on relative strength, even if it was, again, short-lived. Okay? What's good, Hamza? I'm not sure what you're asking me. I'm not sure what you're asking me. But I do want to come back over here and see what has taken place. What has taken place so far. See, that's a much more pronounced run below lows to me. Horrendous down. Okay. So we still got to give this more. We're gonna hop off the stream here in just a few minutes. But that's what I'm expecting for this afternoon. All right. If we get significant price movements higher, or even if this does trade lower one more time, but some sort of divergence forms, if it creates an imbalance on the way to these highs, that next retracement, that next imbalance, I think could be the run from, if that forms or not, up to here. If we are, I guess, bullish enough, if it doesn't stop there, it may continue and get the 40s, maybe. Okay, it is a lot to ask for. Reversals aren't always, the best or the greatest, I guess, but I come on here, I try to give you guys what I think is going to happen before it happens, and that's what I'll be watching for. But as always, guys, look, as always, I could be wrong. If we just dump and continue lower, I'm probably just not going to do anything. I'll probably go read, probably, continue on to chapter 2, or I don't know, be productive, right? Once you know, like, you're not going to trade for the rest of the day, then just go do something productive. So, but Hams, I'm good, man. I got a meeting coming up in about 2.5 hours. And then I have a huge announcement for the channel tomorrow. And yeah, so life's good. God is good. And I'm blessed beyond what I deserve. That's how I am. How are you? Edgar says, I'm always uncomfortable with trades like this because I think my entry was wrong, even if the TP was got hit. Why do you think the entry is wrong though? Were you talking about silver? Were you referring to this in here? About this? Yeah. Well, so here's the thing, man. When we study price, I could take a chart, one time frame. It could be a still. Like I could take a screenshot, print it off, and then, you know, go to a coffee shop and then bring it to a friend and go, okay, well, here's silver on a 5-minute time frame. Let's discuss it. And we could go over all kind of shit. Now, there's going to be some context missing because you don't have maybe higher time frame levels or certain things on there. But what I would look for to study is things like, okay, price shifted from bearish to bullish at 840. So we would have longed pretty much the next candle. We would have taken drawdown, but it still ran to our high. If we had a stop at this low, the market does get close to it, but it doesn't hit the stop. It doesn't hit the stop. So when you see trades like that, or even gold from yesterday, and this is why I make recordings for you. I make recordings for you so you can watch them. And I throw on some music that I like, so hopefully you can, you know, go, oh, okay. We get music recommendations as well. So there's that. But like even here yesterday, you see me in the video, I shorted, I think right here, like early, and then I shorted again on the way up. I mean, I'm in immediate drawdown. Immediate drawdown. But guess what? Am I going to be all that worried about the market going against me for 10, 15 minutes when then it goes immediately my direction, not even an hour later? You know what I mean? So you have to be, well, I wouldn't say comfortable, but you just have to understand a stop loss has a job to do. When you go to work, when you put on a uniform and go to a job, you have a job to do, whatever it is, right? That's what you're there for. Okay? A security guard's supposed to stand there and, you know, do shit what a security guard does, okay? If you're a policeman, you're supposed to go around and fucking shoot people, apparently. Or, you know, give speeding tickets and all that bullshit, right? That's their job. That's what they're there for, right? Hopefully not to shoot people, but I'm just saying. The stop loss is there for you to prevent further loss. Why do you think? Let's continue on this thought for a minute. Why do you think? And I pointed this again, go look at the Discord. Okay, if you're not in the Discord, well, that's your fault, isn't it? Go to the Discord and go to what I shared yesterday. And what did I talk about? Well, it was a 1 minute time frame, but I said the entry was there based on the 1 minute, right? And then I specifically drew a line and said that's where the stop loss would be. That's where the stop loss would be. Why? Why would it be there? Because if stops have been ran, especially if they rebalance price too, and the market shifts from from bearish to bullish, the market's not going to trade below this low. Unless you're wrong. Unless you analyze it wrong. But if that is a stop run, price will not trade below the low. It'll come back to get you in, but it's not going to go to this low. And honestly, it really wouldn't have made a difference whether this wick was like that or if this wick even did something like that. If we can draw that. Let me see. I don't know what color it is. It could have done that because it could have easily came down for this imbalance right here. It could have easily done that. But in any case, it wouldn't have gone to the low. It would have got close. Your hand might have been shaking a little bit. You might have been sweating a little bit. You might have took a couple things out of your Amazon cart. I understand. But either way, the stop was in a place where the market may go against you, but it's not going to hit your stop. And then it rallies. And then all is well. And sometimes it does get uncomfortable. When you see the market do that, instant drawdown, you're going, fuck, I hope I don't take a loss again. Well, you know why we do that? Because when we do that, we are bringing all of these thoughts, we're bringing our previous trades with us at the current trade. When the current trade has nothing to do with any of the previous trades. Mark Douglas talks about this. Each trade is unique. Each trade is independent. What happened on Monday ain't got shit to do with Tuesday. What happened in the Tuesday AM has nothing to do with Tuesday's PM. Okay? It is hard to understand. I'm not saying it's easy. I'm not saying it's easy. Because even me sometimes, I get a little bit of drawdown, I'm going, shit. But just steady the course. Stay the course. Let the trade plan do its thing over time. That's also why Mark Douglas talks about how don't just hyper focus on one trade. It's a sample size. It's not about one trade. It's about 20 or 30. It's not about one day or a week. It's about 6 months or a year or even your whole career. You got to zoom out, just like Marcus Aurelius talks about. When you have an issue or something's going on, you got to zoom out. Look at it from a bird's eye view. You took a small loss on a small time frame. Okay, move on. You know? It's going to happen. That's why we always manage risk. And I teach you guys multiple stops. You have your tight, aggressive, you have your loose, and then you have like or conservative, and then you have your loose stop. And the loose stop almost always goes to the low after a stop run. And all you got to do is study that. Just study that. Lows taken, market shifts, entry, stop, market rallies. Okay, great. So that would have been the trade. Go back, what happened here? Well, you had a run on stops here. The market definitely shifts from bearish to bullish here. Okay, well, the next retracement, you have an imbalance here, or you have a mitigation here. All right, it may have gone against you for a few minutes, right? It may have gone against you for a few minutes, and then just a little bit longer, patience pays, a little bit longer, you'd have been swimming. Swimming in the profits, baby. Yeah, it goes against you. But compare the drawdown to the upside. Okay? It's not easy. Again, I don't want to make it always seem like I have an ego, okay? But we can come on here, we can predict price. Maybe not every time. I do get it wrong, but I'm just saying we can make it look easy. But trading itself is not easy, bro. It's the emotions. You're going to trip yourself up more than probably anything else will. And that's good, Hamza. I'm not trying to ignore you. I did read your comment, though. Since this thing gets some advice from you, I work in the morning, so I trade at night, but I don't find a comfortable situation to trade. Sleep in the afternoon, I'm back at 8 p.m. Well, Hamza, I'm not really sure what to do about that. You got to shift your work schedule, or I would say probably find a new job. That's what I would do. We need you to work in the morning. Well, then I'm not working, bitch. I ain't going to be there then. As simple as that. We can work Friday through Monday, but Tuesday, Wednesday, and Thursday is prime trading, baby. No, no, no. There are jobs like that. Believe it or not, you can find jobs like that. I only know of one. It's a Walmart warehouse. But shit. 40 hours a week and benefits and the ability to trade 3 days out of the week. Shit. If I had to do a job, I'd go right there. If I had to have a job, I'd go right there. I'd be like, what up, Walmart? What up? Well, Edgar, entries are important, but entries are not the most important thing. The number one most important thing is money management, right? Risk management. Okay. That's going to keep you in the game. I would say the second best thing is probably understanding the market direction. Like, where is the market going? Entries are important, but they're not the most important. You can get a great entry, but if you can take a great buy, but if the market's going lower, that sniper entry ain't going to do shit for you. Okay. Are the ticks the last two digits? So I'll break it down for you real quick. The S&P moves in points, okay? But there are 4 ticks to a point. Okay? Like right now, price is at 43.16. Okay? So in order to get to 15, okay, it's got to go to 15.75, 15 and a half, 15.25, and then 15. So 1 point is 4 ticks. This is $50 a point, which means every tick is worth $12.50. $12.50, 25, 37 and a half, 50, I think. Something like that. I try not to do ticks. I usually work in points, risking 3, 4, 5 to make 5, 10, 15, you know, something like that. I try not to do a whole lot with the ticks, but that's what that means, okay? Now, Dow's different. Okay, it's got 6 digits or 5 digits. And then Nasdaq is kind of, it's got 5 digits and then also ticks as well, like 4 ticks to a point. Yeah, it's complicated. I just prefer to trade S&P. It's just the math is easy. I like the price action and it's fine. But sometimes I don't prefer the Nasdaq or the Dow. It can be intense. So there's that. What do you think to AI trading? I've noticed it being advertised lows recently. I don't know, man. I don't know much about the ads and stuff that you get. Oh, okay. So you see that? You see that? You see how we have a lower ES, we have a lower Dow, but we have a higher Nasdaq? See, that's like some shit I want to see. That's what I want to see. Because I'm not saying this is going to be it. I'm just giving you an example. So if Nasdaq is the only one who doesn't trade lower, that may signify this could be like that last stop run. And then if we trade above this high, retracement up to these highs. Like, again, that's what I'm looking for. Okay? We don't have to get that, but that's what I'm looking for. And so the Nasdaq, if it didn't make a lower low here, that might be our low of the day. Okay? But don't force it. We can always draw stuff, expect things, but it doesn't always come to fruition. But that is one thing that I would probably take note of. All right? But yeah, I don't know what these people are trying to push with the AI stuff on Instagram. I don't know anything about it. If we take out highs and lows and then print an imbalance afterwards, it's an entry. Well, Dennis, a trade plan requires an entry, yes, but it also requires a target. You can always have stops ran and imbalances formed, but that doesn't mean they're always going to be respected. And it has to be going somewhere. Okay, the S&P has to be going somewhere. Where is it going to go to? The only logical price level that I have is 43.35 and a half. And maybe higher. Okay? But it has to show a willingness to get there first before I want to take a trade. We could long here, but who's to say the market doesn't keep trading lower? You know? That's why I'd rather wait for the low to be set. Next retracement can predefine the risk. If we can frame a 1 to 3, then I would look to long to go to these highs. And maybe hold 1 if it gets there fast. Okay? I'm from Italy and have a job from 5 a.m. to 1 p.m. And the New York morning session starts at 3:30. That's literally perfect to trade. And I have some time to do other stuff like sports. And so, oh, that's good, George. That's good. See, that's a good schedule to have. I don't like waking up early, man. You know, I'm kind of like Marcus Aurelius in that aspect. That's why I like him. You know, he had trouble getting up in the morning too. So, but anyway, we've been here slightly over an hour. I gave you guys what I wanted to give you. Crows who stalk tigers. You know, it's a cool idea. So, with that being said, I'm going to remind you one more time. If you are a tier 1 or tier 2 member, I highly suggest to switch to tier 3, to upgrade to tier 3. But I will give you more information about that tomorrow. Okay? I'll give you more information on that on tomorrow's stream. Same time, same place, right here on YouTube. 1 p.m. Eastern. Right here. Okay? So y'all stay blessed. Let me cut the music on. Y'all stay blessed, and I'll see you tomorrow.